Hello and welcome back to the Note. Well, after a relatively calm week by recent standards, we can at least, I think, say one thing, which is that the market is now thoroughly prepared for a rate rise from the Fed next month, and its attitude in turn means that it becomes that much easier for the Fed to go through with raising rates as it plainly wants to do. What we're looking at here is the yield on the 2-year Treasury bonds. Obviously, 2-year yields are extremely closely linked to the near-term future for interest rates, and you can see that it's hit a new 5-year high today. Plainly, people are prepared for an interest rate rise very soon in a way that they haven't been throughout the great long era of QE that has followed the crisis. Now, if you take a look at other markets, the US stock market is hovering very close to its highs. The S&P is back in positive territory for the year. If you take a look at foreign exchange of emerging markets, a critical reason why the Fed stayed its hand earlier this year, those are at least stable and above their lows from earlier this year. There doesn't seem to be any great weight pushing in the markets to thwart the Fed from raising rates as it wants to do. Now, that's positive because there are other reasons for great concern about the US stock market. It is very narrow. If we take a look at this next chart, which compares the Russell Top 50 index, that's the index of the 50 biggest companies in the US by market cap, compared to the Russell 2000 index of smaller companies, you can see that during most of the big rally following the crisis, smaller companies emphatically outperform. That's what you would expect. That is firmly in reverse now. The mega caps are outperforming. That is generally a sign either that a bull market is coming to an end, or indeed that a bear market is effectively already underway. The advance is very narrow at this point. It's limited to a few very big companies. Indeed, all of the advance in the S&P for this year can be accounted for simply by Amazon and the alphabet stocks that underpin Google. Just take away Amazon and Google and the rest of the S&P is utterly flat for the year. So as we enter a week when Americans will be giving thanks, I think the bottom lines are that we can be thankful that we do appear at last ready to bring an end to the era of lower rates, but we also need to be a little fearful that the stock market appears ready to roll over into a bear market.